Now let's talk about some basics about Medicare. Medicare is mainly broken down into two base parts. You have Medicare Part A and Medicare Part B. Medicare Part A is going to be anything for inpatient care. So if you're admitted in a hospital, skilled nursing facility, hospice care, that's where your Medicare Part A is going to cover you. Your Medicare Part A generally is at no cost. As long as you work 10 years in the United States, you're not going to have a premium for your Medicare Part A. It's totally free, but you will have some out-of-pockets related to your straight Medicare A. Again, we're talking about just assuming you have only Medicare. Now, in the event that you are hospitalized with straight Medicare, you're going to have a deductible of $1,736 just to go to the hospital. Whether you're there 1 day, 2 days, 60 days, it's a $1,736 deductible. Now, again, that covers you for anything in an inpatient setting. You have a second part to your Medicare, which is Medicare Part B, as in Bravo. This is going to cover you for anything outpatient, anything outside of the hospital. So think doctor's visits, outpatient surgeries, labs, imaging, therapy visits, anything that's essentially outside of the hospital is going to be considered the Part B portion, which falls under the medical portion of your coverage. Now, with the Part B of your Medicare, there isn't a monthly premium. Assuming your income is in the standard level, you're not a high income earner. In 2026, your Medicare Part B premium is going to be $202.90 per month. That's the standard cost of your Medicare, assuming you're not a high income earner. Now, if you have your Medicare Part B as well, Medicare is going to cover 80% of your health care, leaving you with your differences of 20% plus a deductible. There is a one-time Part B deductible, and that Part B deductible for 2026 is $283. Now, depending on the plan you have, some of these out-of-pockets may or may not apply to you. But again, what we're talking about is just standard Medicare only, assuming you have no other coverage. You never spoke to a licensed, charming, good-looking representative like myself, wink, wink, and you didn't get changed up to another plan. So we're talking about straight Medicare here. Now, the Part A and the Part B portions of your Medicare is the foundation of your coverage. Think of this as like the foundation of your house. Before you and I can build off of that foundation, we have to make sure that foundation is poured. That's the Medicare A and the B. From here, you have decisions to make. There's a third part to your Medicare here, which again is not the foundation, but it is something that is required, and that's Part D, as in drugs. The Part D portion of your coverage can come one of two ways. You can either buy it as a standalone drug plan that you pair with your Medicare or supplement policy, or you can have it combined into a Medicare Advantage plan. That's where they combine the medical and the drug coverage all into one plan. More on that in just a moment. But with the Part D portion of your drug plans, the premiums can range depending on which plan you decide to go with. We've seen plans as little as zero premium. We've seen plans as high as almost $200 per month. With the Part D portion of your drug plans, you do have out-of-pockets that you have to meet. Depending on the plan that you go with, you may or may not have exposure to some of these deductibles. But just to talk about standard cost related to prescription drug plans, you have a deductible of $615. Now, that is a standard part deductible that you need to pay before your insurance policy is going to help you with certain medications. Now, again, this is plan specific. Some plans, if you pay higher in premium, or some Advantage plans will actually remove that deductible and you'll have coverage day one for your medications. Something new for 2026 as well is a new cap. It's actually started in 2025, but they've carried it over to 2026 as well. And this cap, you got to think of this kind of as like a safety net. So this cap is $2,100 for 2026. This cap is designed to protect the consumer, to make sure you're not being nickeled and dimed for medication costs throughout the year to where you end up having to file bankruptcy or clearing out your bank account just to afford medications. This $2,100 cap essentially is a promise saying you're going to be responsible for some out-of-pocket related to your prescriptions, but you're guaranteed never to spend more than $2,100 in the calendar year. Now, this is a big improvement as of the last couple of years. This was actually carried over from expansions of different laws built into the Inflation Reduction Act. It was also expanded a little further, part of the Big Beautiful Bill. We have another video related to the Big Beautiful Bill you can watch right here if interested in getting a deeper dive into those details. So keep in mind as well, whenever you're shopping your Part D drug plans, you're going to want to make sure that your medications are covered. Every drug plan is going to have a formulary, which is a list of how the medications are covered. You want to make sure that not only are your medications covered, but they're covered well. Reach out to a licensed insurance broker in your area, or feel free to reach out to my team and I. We're happy to help you out with shopping plans based on medications as well. Now, the fourth part of your Medicare is Part C. Part C is what we call Medicare Advantage plans. And this is where private insurance companies take your Medicare and your Medicare Part D and they combine it all into one policy. This is what we call Medicare Part C, also known as Medicare Advantage plans that include prescription drugs in most cases. We'll have more information later in this video about what Medicare Advantage plans are. So whenever it comes time to make a decision related to your Medicare, you have really two main options. Your first option is what we call Medicare Supplement plans. Now, if my clients go the Medicare Supplement route, and it's a big if, it all depends on clients' needs, but if a client goes the Medicare Supplement route, the most common plan my clients like to go with, if they go the supplement route, is Medicare Supplement Plan G. Why is that, Edwin? Why is Plan G the common route if someone's going the supplemental route? Well, the main reason why is because Plan G has two main bullet points or two main features. The first main feature is no network. And what that means is as long as your doctor accepts Medicare, they're going to accept your supplemental policy, meaning you're not having to worry about provider networks. You're not having to worry about directories or calling up offices to see if they take your insurance. You just very simply ask your doctor, hey, doc, do you take Medicare? If they say yes, you're good to go. That means they're going to also accept your supplemental policy. Okay. The second bullet point to Medicare supplement policies is that there's no out-of-pocket. Medicare is going to cover 80% of your health care, and your supplement is designed to pick up your 20% plus your deductibles. Now, specifically with Plan G, is going to cover all of your out-of-pocket expenses except for a one-time Part B deductible for 2026. Your Part B deductible is $283. So to think about this in real life, if you have a Medicare supplement plan, you go to the doctor in April, the doctor says, hey, you have to go to the hospital. They have to do surgeries. They have to run tests, whatever it may be. Edwin, what do I pay? Medicare is covering 80% of your bill. Your supplement plan is picking up the rest of your differences. Again, you do have that one-time deductible of $283. Think of that also as your maximum out of pocket. But once that's met, your hands are washed, you're done for the year. Edwin, what if I'm spending 10 days in the hospital next week? $0. What if I have to have cancer treatments? $0. What if I have to XYZ? Doesn't matter. Between Medicare supplement, they're going to cover all of your out-of-pockets together. Okay. Again, I'm not here to tell you what the right option is or what the wrong option is. There's really no way to know until we dive into your file specifically. It's all based on your individual needs and goals. Feel free to reach out to my team and I for a detailed conversation regarding your individual needs. The prices of supplement plans can depend on many factors, depending on the plan specifically you're looking at. But again, just to keep things simple, let's assume we're still talking about Plan G. With the supplemental Plan G, the plan's premium can range anywhere between $100 to $2-3 per month, depending again on where the client resides. Tobacco status, gender matters as well when it comes to supplement policies. So again, make sure you do your due diligence. When it comes time to shop supplement policies, what we're shopping normally is going to be for your price, not brand preference, because supplement plans are going to cover you the same across the board, whether you go with a Plan G with United Healthcare or Mutual of Omaha or Blue Cross Blue Shield, doesn't matter. Supplement Plan G covers you the same across the board with every carrier, generally speaking. If you do go the Medicare supplement route, you do have to add drug coverage onto that policy. It doesn't include it, so you do want to purchase a Part D drug plan. That's something we take care of during our consultation. So if you decide to go the supplement route, then all we're doing is really just shopping the Part D drug plans based on your medication needs. That's the Medicare supplement options in a nutshell. We have a second option when it comes to Medicare, and we call these Medicare Advantage plans, or option 2. I call them as option 2. We call Medicare Advantage plans. The way these plans work is rather than Medicare being responsible for 80% of your health care, or you having to buy an expensive supplemental plan to fill in those gaps, Medicare says this, hey, private insurance companies, how about we pay you guys a set amount every month to take care of Mr. Hart, for example. Whether he's sick, healthy, happy, sad, traveling, staying put, doesn't matter. Medicare is paying the insurance company a set amount to take care of this client. Whether that client needs the coverage or not, Medicare is funding that private insurance company for that client. In turn, in states like here in Florida, we're able to offer clients plans as little as zero premium. Zero premium, Edwin, what's the catch? How can I get insurance at no cost? Medicare's funding these policies in the background, whether you're using the coverage or not. So they're getting paid in the background hundreds to thousands of dollars per month, depending on the client, the plan, the zip code, the client's individual needs. The insurance company is getting funded in the background to take care of that client. So with Medicare Advantage plans, they're offered to you as a little zero premium. Again, the way they're funded is Medicare is paying a set amount every month to the insurance company to take care of you. Now, the catch to these plans being a zero premium is that you do have to use doctors and networks. So you want to make sure the doctors that are important to you take your plan. You also want to make sure that you're okay with your potentials for out-of-pockets, because with Advantage plans, they also have copays or cost share related to the program. With Medicare Advantage plans, they can also offer some additional benefits that traditional Medicare doesn't cover, like discounts on dental, vision, hearing, gym membership, and of course, prescription drug policies built right into the program. So you don't have to go shop multiple different companies and plans for shopping medical and then drug plans separately. With Advantage, it's all tied into one package. Because these plans do have out of pocket as you're seeking services, there's a feature called a maximum out of pocket. And think of that number as a safety net. I always tell my clients, I hope you never need your insurance, right? But God forbid you have a catastrophic year. You want to know that you do have a safety net. You're guaranteed never to spend more than X amount of dollars in the year. God forbid you have a catastrophic year. And that maximum out of pocket, it's not a goal, it's a safety net.